Have you ever wondered how the ups and downs of the stock market can affect your daily life? Recently, there's been exciting news from Wall Street that might just make a difference in your pocket. US stocks have seen a significant jump, led by a surge in technology companies, all because of some fresh data on inflation. This new information has kept alive the hope that interest rates might be cut, making loans and credit cheaper for everyone. But what exactly does this mean for the average person? How do these big financial moves impact our savings, our mortgages, and even our plans for the future? Welcome back to Stock Whispers, your gateway to investment brilliance. Today, we've got some piping hot news straight from the oven that's sure to tickle your investment fancy. All right, let's dive into what's happening without making things too complicated. The stock market suddenly felt like shaking things up and having a little dance party when the latest CPI inflation data came in. For those who start yawning at the mention of CPI, hold on a second. This CPI thing is actually important. It stands for Consumer Price Index, and it's a fancy way of saying how expensive life is getting for folks like you and me. Why does this matter? Well, it gives those bigwig investors a clue on what the Federal Reserve might do next to control prices. And here's the kicker. The numbers were a bit more eye-opening than everyone thought they'd be. But here's where it gets interesting. Despite the CPI throwing a curveball, it seems like investors weren't too shaken. They're betting that the Fed has already been rolling up its sleeves and getting tough with its strategies to keep inflation in check. So in a way, it's like the stock market saw the spicy data, shrugged and said, "No biggie, we've seen it all before." It's as if the market and the Fed have been in a long dance-off, and the market believes the Fed has some good moves to keep the party going without letting the inflation monster crash it. So, here's the scoop from a very exciting Tuesday in the world of stocks. Picture tech stocks rolling up their sleeves, if they had sleeves that is, and taking the lead like the heroes in a movie. They practically said, "Hold my circuit board," and off they went, pushing the stock indexes up, and away to happier places. The S&P 500 wasn't just playing around, it soared to a brand new closing high. Big players like Nvidia, Meta, and Microsoft weren't shy about joining the party, posting some impressive gains. This whole fiesta kicked off right after everyone got a peek at the February inflation numbers. And guess what? The numbers were cool enough not to freak anyone out about any immediate interest rate hikes. Now let's talk about what this all means for the future. According to Jeffrey Roach, who's pretty much a wizard at LPL Financial, the market's got its sights set on a rate cut happening by June. You might be wondering, what's with all this talk about rate cuts? Well, it's kind of like the financial world's version of expecting a break after running a marathon. Even though inflation has been sticking around like that annoying piece of gum that won't leave your shoe, the Federal Reserve seems to have things under a pretty tight grip. That's making everyone a bit more relaxed about spending and investing, knowing things might ease up soon. So what's the big picture here? Despite inflation being a bit of a party pooper, sticking closer than we'd like, the vibe in the stock market is surprisingly optimistic. Tech stocks, in particular, have decided they're not waiting around and have taken matters into their own hands, leading the charge towards greener and richer pastures. The February inflation data didn't scare them one bit, and with whispers of a rate cut on the horizon, it feels like there might be some room to breathe easy soon. In the grand scheme of things, it's like everyone's playing a giant game of financial chess, and for now it looks like the tech stocks are making some smart moves. The Bureau of Labor Statistics dropped some numbers that made a few eyebrows go up. Inflation, the measure of how prices are rising, went up by 0.4% for the month. And if you're wondering how things looked compared to last year, there was a 3.2% increase. But wait, there's more. There's something called core inflation, which is like inflation's more predictable sibling. Core inflation doesn't get distracted by the often erratic food and energy prices, and guess what? It also rose by 0.4%. This was a bit more than what the experts, or as I like to call them, the folks with calculators, were expecting. It seems prices are heating up a tad more than anticipated. Skylar Winan from Reagan Capital had something interesting to say about it. He likened the Federal Reserve's decision on interest rates to flipping a coin. Will they cut rates in June, or will they hold their horses until September? It's a bit of a guessing game. Getting inflation down from a staggering 9% to a more manageable 3% was quite the dash, similar to sprinting in the financial Olympics. But easing into the Fed's dream zone of 2% inflation is shaping up to be more of a jog than a sprint. It's like trying to slow down after you've been running fast. You can't just stop without stumbling a bit. It was quite the day in the stock market, like a scene straight out of an investor's dream where everything is coming up roses. Picture this: investors, filled with renewed enthusiasm, jumping back onto the market train as if they'd never left. And who were the stars of the show? None other than our beloved tech giants. Nvidia, always ready to make a splash, didn't just dip its toes in the water. It dove in headfirst with a leap over 7%. Not to be left in the dust, Meta and Microsoft also enjoyed their time in the sun, basking in the glow of significant gains. It's like they all decided it was time to throw a party on the stock market, and everyone's invited. Plus, there's a hint to keep our eyes on the horizon for the Producer Price Index later this week, a clue that might tell us where prices are dancing off to next. Moreover, as the day wound down and the closing bell rang its final note on Tuesday, the scoreboard was something to behold. The S&P 500, feeling pretty spry, was up by 1.12%. It's as if it decided to put on its running shoes and sprint towards the finish line. The Dow Jones Industrial Average, not wanting to be left out of the fun, also put in a solid performance, climbing up by 0.61%. It's more of a steady pace for the Dow, like a jogger, keeping their rhythm steady through the park. But the real showstopper? The Nasdaq Composite, which decided modesty was overrated and surged up by an impressive 1.54%. The Nasdaq was like the sprinter, breaking away from the pack, aiming for gold. So, what does all this mean for the average Joe and Jane watching from the sidelines? Well, it's a bit like watching your favorite sports team pull off a spectacular win. It's exciting, it fills you with hope, and it makes you wonder what's going to happen next. With the tech titans leading the charge and the stock indexes posting some pretty happy numbers, it's a reminder that the market is full of surprises. And with the Producer Price Index peeking around the corner, we're all waiting with bated breath to see what new twists and turns are in store. The market, much like a good book, always has another chapter, and it's anyone's guess what the next page turn will reveal. And of course, in the bustling world of market news, there's always something sizzling on the stove. For starters, whispers are floating around from the research firms, hinting at a possible market correction on the horizon. Yet it seems like no one's really losing any sleep over the thought of a bear market prowling around the corner. Then there's Jamie Dimon, a big name in banking, who's decided to throw a bit of shade at Bitcoin, likening it to a cigarette. It's a quirky comparison, suggesting he's probably not going to jump on the cryptocurrency bandwagon anytime soon. In other corners, undocumented immigration is catching some positive attention for giving the labor market a bit of a boost. And over in Russia, President Putin is eyeing a tax increase for the well-off to help fund the ongoing situation in Ukraine. Meanwhile, firms buried under a mountain of debt might want to brace themselves. 2024 is looking like it could be a year of tightening belts and possibly layoffs as they struggle against rising interest rates. Shifting gears to the world of commodities, bonds, and the ever-turbulent seas of cryptocurrency, things seem to be humming along with a mix of ups and downs. Oil prices are playing it cool, barely budging from their spots as if they're lounging in a chair with no urgent place to be. Gold, on the other hand, seems to have tripped a bit, sliding down by 1.22%, which might have a few investors frowning at their portfolios. The 10-year Treasury yield is like that student in class who's quietly inching their hand up, with just a slight uptick to report. As for Bitcoin, the digital gold of the internet, it's just hanging out at a lofty $71,424, chilling like it's in no rush to move up or down, despite the shade from financial bigwigs. There you have it, investors. A tech-led rally has given the US stock markets a reason to smile, all while the inflation data plays a game of "I'm not touching you" with the Fed's rate cut expectations. Thanks for tuning into Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon.